MACD, or the Moving Average Convergence Divergence, is a technical indicator used to identify the formation of a new trend. It's made up of three main parts: the faster moving average, the slower moving average, and the histogram. For this test, I will be using the 200 exponential moving average for my directional bias and the MACD for my entries. My stop loss will be 5 pips below the previous low in buy setups and 5 pips above the previous high in sell setups. My take profit will be 2 times my stop loss for a 1-to-2 risk to reward ratio, and my break-even point will be at the 1-to-1 ratio. Like the title said, I will be taking 100 trades using this strategy across 5 different currency pairs while on the 30-minute time frame. These trades will start from the 1st of March 2022 until 20 trades are made across each pair. And actually, that reminds me, everyone here is interested in trading, whether it's trading stocks or Forex. So hear me out. If you're looking to start trading or already trading with little to no success, you should remember to trade with a regulated broker. They are bound by the law to offer complete transparency, so you know what's happening to your money. They also give risk warnings and fraud protection. To make your search easier, I linked a regulated broker down in the description that even gives a $30 trading bonus once you sign up. It will be the first link in the description. Everything from now on will be sped up for the sake of time, and I will be giving you the results at the end. Now here are the results. Across 20 trades taken for British Canadian dollar, 370 pips were lost for a win rate of 26.7%. 859 pips gained with British Japanese yen for a win rate of 58.8%. 631 pips loss for British Swiss at 6.3%. 439 pips loss for Euro USD at 17.6%. And finally, 278 pips gained at 52.9% for Euro Pound. All of this for an overall win rate of 34.1% for a profit of negative 303 pips. So what I've learned was trading using the MACD strategy under the conditions I used in this video is not profitable. Maybe using a different take profit or combining it with another indicator would change its overall win rate, but that will only change the strategy as a whole. After further investigation, I came across the Trading Rush channel, who got a win rate of 62% using this exact MACD strategy. In their video, they took 25% of their profits off after the first take profit. Based on the number of wins I received, my win rate will still be below 50% using this exact take profit. You should keep in mind that these trades were taken in a time of increased volatility from the Ukraine invasion, so the win rate recorded is not a true reflection of the overall win rate of the strategy. Saying this, I think everyone watching this video wants a strategy that can stay profitable through anything. One of the flaws I noticed even before the test was a constantly changing stop loss. Using this strategy means putting the stop loss below the previous low or above the previous high when taking trades. This also means that the stop loss is different for every trade, some even being as large as 126 pips. I always preach that you should not be risking more than 2% of your account on any trade, and in order to not risk more than 2%, with a stop loss that's constantly changing, you will need to pull out your calculator for every trade to find out what lot size you're going to use. This takes time away from your entry and can cause late entries, as you cannot change your lot size after entering a trade without consequences. In my opinion, trading should be a simple process in order to be consistent and produce consistent results. That's why I created my own strategy. I will leave you to draw your own conclusion on the MACD strategy. If you enjoyed the video, comment what strategy you want me to test in my next video, and make sure to watch another one of my videos at the end screen. I'm out.